Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Eric Rosenblum of Tsingyuan Ventures. Eric, thank you for joining us.
Thanks for having me. You pronounced it perfectly.
Thank you so much. It's great to see these new funds coming up that go into the China marketplace. But before we get into that, can you tell us a little bit about your background and how you got into the early stage investing world?
Yeah, well, I think that's a great place to start because it'll also explain a little bit about Tsingyuan Ventures. So I graduated from Harvard in 1992, and I studied Chinese history and economics. And I'll loop back to this in a moment, but when I was graduating in 92, my co-founders of Tsingyuan were graduating from a school called Tsinghua in Beijing in 1992 and moving to the US. I, at that time, moved to China, so I was going the opposite way. So in 1992, I relocated to China. I was one of the first hires for the Boston Consulting Group in China. So I was one of the first associate hires in the country. And that set me on a path. I thought I would be in China maybe for a year and come back do my PhD, but I ended up being an associate for BCG for 2 years. They paid for me to go back to MIT for my grad school. So I did my business degree at MIT for another 2 years. So I owed them 2 more years back in China. That time, what's called a consultant. Now, at that time in China, that brings me to 1999. It was changing so fast, and there was so much entrepreneurial spirit in China. I already knew I wanted to go into entrepreneurship at that time. That was one of the reasons I chose MIT, because it was a great place for technology and innovation. So I started my first company, which was a small media company called ChinaNow.com, which is kind of like city search for Chinese cities. And the experience was good. We had a good reputation. We got some market traction. We had a very small exit, nothing that we considered hugely successful, but reasonably so. So after that experience, we had one startup under our belt, and a group of co-founders and I founded a group of companies around what was called mobile value-added services. And so that included mobile content, mobile payments, and the management and the middleware that would allow a mobile operator to offer these services. So that group of companies, the company I was CEO of, was called SmartPay, but it was affiliated with a company called LinkTone and a company called Intrinsic. LinkTone went public on NASDAQ in 2004. It was one of the earliest purveyors of, again, mobile value-added content in China. So it did simple games, ringtones, wallpapers, et cetera, for phones back in those days. SmartPay connected the phone system to the banking system. And Intrinsic was the platform that the mobile operator was using to sell all of these services. SmartPay was then purchased by Ping An Insurance Group later and became one of the first payment processing companies in China. So this takes me to 2007, and I moved back to the States with my family, and I was fortunate enough to work for Google, and I was a product director at Google. And also we'll loop back to the startup, and I'll finish here very briefly, but to say that my partner in crime at Google, I was a product director. My partner was someone called an engineering director called Richard Liu, who is from the school in China called Tsinghua. And he and I worked extremely well together. I would help work with him and plan a product strategy, and he would work with me to plan the engineering strategy and manage the team. And we just really enjoyed working together. Richard had been part of a group of graduates from the school in China, Tsinghua, that were here in the US. And they had a belief that their fellow graduates, many of whom had been very successful as technology executives back in China, would love the opportunity to invest in early stage US companies, but they didn't necessarily know how to find those companies. So he had joined with a group that at the time was called TEEC Angel Fund. I'll go into that in a moment, to find and invest in these companies. So at some point, I became an investor in the fund and became a partner in the fund. And then last year, I became one of the managing partners, and we rebranded to Tsingyuan. But just to finish on my biography, after leaving Google, I was head of product and then the COO of a venture-backed company called Drawbridge, which is big data applied to cross-device advertising. And then finally, I was one of the product leads for Palantir, the data analytics company based in Palo Alto. So my background is mostly in entrepreneurship and in product management and general management, but then eventually became a full-time investor with this group team.
Great. So let's talk about the fund for a moment. Can you tell us more about the investment thesis you have for it and how did you come to that?
Sure. So, as I mentioned, the history of this started with a group of people out at Tsinghua University. And their thesis was that they would invest in early stage US technology that their compatriots back in China would not have great exposure to. But as it happens, and as many of these very small startup venture funds happen, you start investing in people in your network. And so this started back in 2011 with the first fund. So that was called TEEC Angel Fund 1. And one of the very successful investments was behind an entrepreneur named Eric Yuan, who was the CTO of WebEx, which was acquired by Cisco. And he was emerging to start Zoom video communications. So this group was the first investor behind Zoom, which is today $1 billion plus company, but we put the first money in. The second fund, which was in 2013, the two very successful investments that have emerged from that, and there are others, but one is called Quanergy, which is solid-state LiDAR, and the other is called Ginkgo Bioworks, and both of those are now worth over $1 billion. Now, at the time, the group is really investing in technology-centric businesses that they had some sort of connection to. In the case of Eric Yuan, fellow China expatriate, very solid technologist. In the case of Quanergy, again, the CTO is from China University of Science and Technology. Again, very strong technologist. When we launched this latest fund, we really wanted to examine what our thesis is. And we determined that when we did well, it was around two factors. The first is when there is some relation with China. And that we split into a couple of parts. First, that the technology itself would be very valuable in China, no barrier to it. And second, that the team itself would be able to operate in China effectively. And sometimes that means because they are from China originally, and sometimes that means because they're mature operators. They've been able to set up international operations in the past. The second thing that we like are high technology ideas that are cross-disciplinary. And when I say high tech, that means that the technology itself, the value of the company, is in the IP. What I mean by cross-disciplinary are that, generally speaking, there are areas of science that are fairly separate. And the best example I can give is self-driving cars. To make a self-driving car work, you need a combination of software expertise, in particular AI, you need computer vision, you need sensors and sensor fusion, you need automation and robotics. So all of these different researchers and PhDs need to come together to be able to make this a reality. These kinds of businesses are extremely difficult to evaluate at the early stage because you have such different disciplines out together that just to do due diligence is difficult. Those are the kinds of things that we like because we think it plays to our strength. The team is basically all PhDs in various branches of science, and we feel very good about evaluating early technologies that are in deep tech and cross-disciplinary tech. So anyway, to boil this down, our thesis has two parts. We like areas that can bridge China and the US, and we like areas that are cross-disciplinary. We invest at the seed stage or pre-seed, and we normally write around a $500,000 check.
Great. That seems like a very good place to be. There's a lot of opportunity in that sector for sure. For the investors side of our audience, what advice do you give them about investing in startups? What should they be looking for as they come into this world of venture funding?
Yeah, well, I think there's two parts of it. One is as an individual investor. So if you're an angel, when I started out being an angel investor, I was probably fairly typical. I was very opportunistic. And I was fortunate enough that I was in China during a period of huge innovation and explosion. And I worked for Google during a period also of exploding growth and a lot of people that were extremely talented making their fortunes and then wanting to move on and do something on their own. I would invest behind people I knew. And my approach to portfolio management was fairly random. It wasn't really around a portfolio theory of how large portfolio needed to be and allocating a certain amount of funds around different stages. I just wrote checks to people that I knew and that I liked. And that approach, fortunately, did work for me. But in all honesty, now that I look back, I kind of cringe about the approach because it really has it's very high risk. And there's really no reason that I should have succeeded with an approach like that. So the first advice I have is, as an individual, there's a lot of resources to educate yourself. People like David Rose and others that have been doing this for a while, I think, have written great guides to getting started as an angel investor. But being disciplined about building a portfolio, understanding how much money you're going to allocate, how many companies you're going to invest in, and then building those sorts of sourcing networks is really important. Now, the implication of that for most people is that, geez, this is a serious commitment. If you're going to do this as a part-timer, it's hard to just dabble and expect that you're going to make any money. If you don't expect to make money, you just want to learn, then that's fine too, but you need to know what your goal is. Now, turning to more professional investors, one thing that I feel really good about with our fund, but I think it's important for other funds to really understand whether or not this applies to them. I think that our thesis is differentiated. And so as I mentioned, the two pieces, we think that China plus the US leads to some unusual opportunities, number one. And number two, we think that cross-disciplinary technologies, a couple of areas, lead to unusual opportunities. I haven't found very many venture firms that are pursuing those areas, and those areas are big, and they've led to some huge companies, some huge breakthroughs. On the other hand, I meet a lot of investors where the thesis to start with, at least for new investment firms, it's just that I happen to be connected to a particular group of companies or a particular group of people who are going to invest behind them. And my view is that that's just not good enough or differentiated enough, that you really do have to be disciplined about finding why your group has an advantage and then sticking to that, because you're constantly going to be barraged with opportunities that don't quite fit your thesis. And you really need to stay true to your thesis, because even if you're tempted by something that seems good at the outset, the chances are that there are many things that you're missing because you're stepping outside your comfort zone. And if that thing that's outside your comfort zone you think should be part of the thesis, spend some time to research it. Spend some time to understand if this area is something that, for whatever reason, you want to include. But I try to avoid being opportunistic about seeing things that are not in our thesis, but are tempting. And we try not to be tempted by those things.
Well, China certainly is a great opportunity. It's this, after the U.S. is probably the market to go into, one language, one currency, vast market to go into. But maybe you can describe in more detail what opportunity you see coming out of working with China at this point. I can imagine many, but what do you put at the top?
Yeah. So just to be clear, so our fund invests in the U.S., but we invest in companies from the U.S. that can operate with great effectiveness in China as well. So they can take advantage of both markets. So I just want to focus on that for a moment and explain a little bit. So there's some areas of technology where the research and the state of innovation in the U.S. is still ahead of China or is complementary to China. But the market is exploding in China either in parallel to the U.S. or ahead of the U.S. And I'll give a couple of examples. The first example, I'll go back to one of my earlier points, which is self-driving cars. So we're an investor in a company called Jingchi, that's JINGCHI.ai. They are a full stack, what's called level 4 automation. So they're building cars that drive themselves for the purpose of essentially self-driving taxis, self-driving trucking. And they're in the race to become the Waymo of China. It's the leading player in self-driving cars in China. Now, it so happens that they and the other two companies they're competing against to be the winner in China are all based in California. They're all based around Sunnyvale and Cupertino. Now, there's a reason for that. It's because the key component of a self-driving car includes things like computer vision, decisioning, and routing. And those disciplines are more advanced in the US. Even if the PhDs and researchers and staff engineers working on these problems are Chinese nationals, chances that they worked for Google or they worked for Uber or they worked for Tesla or they worked for other AI-intensive companies, but in the US. Now, most of them have the majority of their employees, though, sitting in China. So even though the headquarters in the US, their source of most of their operations is sitting in China because they need to be working with Shanghai Automotive, Guangzhou Automotive, and certain disciplines in China are more advanced, including some aspects of robotics and automation. So you have the opportunity to have a company that from day one is cross-border, taking advantage of innovation in both places, and can move very quickly. And by the way, the market for autonomous vehicles and electric vehicles will be far larger in China than the US. The simple statistic to understand this, China has well over 100 cities with over 1 million people. And the US has around 10 cities with over 1 million people. Highly dense places where electronic charging stations can be set up with density is hugely advantageous for fleets that will be fully electric and fully autonomous. So that's one. And there's certain characteristics of that market. I'll give a second example. Genetic sequencing is more advanced in the US than in China. And so the premier labs that are working on genetic sequencing are Jennifer Doudna's lab here at Berkeley. She came out of Yale. Her old lab at Yale is also considered a market leader. MIT is a market leader. So there are some clusters of advanced technology in the US that are ahead of their counterparts in China. However, the market as a place for the application of genetic testing is advancing with leaps and bounds in China. And many of the research scientists here in the US are from China themselves. So this is an area where you're going to have great cooperation cross-border. You're going to have scientists that are working on different things that are cooperate. It is one of the beautiful things about pure scientific research is that there are very few barriers often to collaboration across border. So we think it's one of those areas where there's going to be companies that can make it in both markets and take advantage of innovation in both markets. So at any rate, to give a list of opportunities, I think everything around auto tech, autonomous driving, computer vision, DNA sequencing, a number of other areas that are inherently cross-disciplinary will also be cross-border, are great opportunities between China and the US.
So, but what are the risks in working with China? What do you see as the thing you worry about when you work with companies in that direction?
So the first thing, again, just to go back, we only invest in the US. If I look at this from the point of view of a company that is interested in expanding to China, the risks are probably at least twofold. The first is operational risk. It's very difficult to enter any new market, but the Chinese market is usually particularly cutthroat in competition, particularly on the consumer side. And we also, by the way, don't invest in consumer-facing businesses. We only invest in B2B businesses. And so it's somewhat less so for us. But China is a highly competitive, fast-moving market. So risk number one is operational, which is you can't think about entering China unless you're ready to devote quite a lot of resources and time to it. It's not something that you do just on the side. It's something that has to be core to the strategy of the company. Number two is always the possibility of either IP theft or some kind of business innovation theft, which I do think exists in many places in the world, not just China. But again, you're dealing with a different regime, and litigation can be expensive, time-consuming, distracting. So you have to be pretty savvy about who you're partnering with, how you protect your IP, whether or not you have the proper patents filed, et cetera, and understand the protections that you have. The final category of risk are various kinds of political risk. So watching the situation between the US and China, what kinds of technology will be considered sensitive. So we, for example, we don't have any investors with Chinese government backgrounds. We want to make sure that's clear that we're a US-based investment company that invests in US-based companies. And these companies happen to be able to operate in both China and the US effectively. But we want to stay clean. We are not a Chinese government-backed entity in any way, shape, or form. And we want to stay true to that. So the third category of risk is political risk. And again, the way that we want to be able to manage that is everything from our LP base, make sure that from an investment standpoint, we are entirely backed by private entities, do not have any kind of government affiliation, number one. And number two, be smart about the technologies that we're investing in. So things that might have a national security tinge to it, we would probably stay away from just because it doesn't fit our thesis. These would be things that would be hard to bring cross-border for security reasons. So we have to kind of be aware of where we can take advantage of the markets between the US and China without bringing additional risk on to either ourselves or our investments.
Well, it seemed like your portfolios would be relying upon you to help them vet these Chinese partners that might come in to help the U.S. company after funding. And how much time do you spend actually helping them figure out who to work with and how to navigate those waters in China?
Yeah, we do spend a fair amount of time on that. And so, again, because we're investing in companies at the seed stage, it's fairly early for them. And so we will work with them and kind of prepare them for when the time is right and how to think about partnerships, how to think about operations when they want to start to expand. Usually it starts with expanding the engineering team. So, the playbook in the US had traditionally been that product and engineering all stay in the US, and then you expand with a sales team overseas. And the sales team is often hamstrung by not having a product they feel is appropriate. Many of the companies that we're investing in from very early stage have some engineering and product capabilities in China. And so they're able to operate more autonomously and in a more locally appropriate. But we will work with them on building first the team. And then to the extent they do need partnerships, we spend a fair amount of time on that as well. because of the nature of our team, all of us were either very senior engineers or very senior product or even CEOs of companies. This is where we really dig in. It's how to build that early organization that's able to span cross-border where necessary.
Seemed like a great opportunity. In the last few minutes we have here, what else should we cover that we haven't?
Well, I think that we've done a pretty good job of all this. The thing that I would say that we spend a lot of time thinking about is we're constantly trying to understand the balance between taking advantage of a second market or a second source of innovation. So in this case, we think of China as one of the really great centers of gravity for innovation versus the distraction. So to what extent are you distracted by second market opportunity or trying to get innovation from second source? And so this is an area that we think is a fundamental question around our investment thesis. Is sometimes this thesis lead you down a path where there's a distracted CEO or a company that's stretched too thin versus a path where the company is faced with double the opportunity, double the exit opportunities, greater source of innovation, talent, and all the good things that come with it. So not really something that, to delve too deeply into, but just wanted to mention that as something that we think is important, and we spend a lot of time trying to figure out within our thesis.
Well, we appreciate you sharing your information with us today. How best for the audience to get back in touch with you?
Yeah, so the best way is you can contact us through our website, which is Tsingyuan.ventures. Tsingyuan is spelled TSINGYUAN.ventures. I think this will also be listed on your site. And my name is Eric Rosenblum. So I'm Eric.Rosenblum, ROSENBLUM at Tsingyuan.ventures.
We'll include those on the show notes so people can get back in touch with you. Appreciate your taking time and hope to have you back for a follow-up to see how things are going, and wish you success with it.
Wonderful. Thank you so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.